TFNN. Headline News Update. Here's Tom O'Brien.
Good morning, everyone. Basil Chapman sitting in for Tom O'Brien. This is the 10 a.m. update brought to you every day by Everbank. For more information, of course, you can go to the front page of TFNN. We're looking at a Dow that's down 42. This is the chart on the left. If you're looking at my charts, daily chart, weekly chart, monthly chart, a little 120-minute chart right here in the corner. What we're looking at is the Dow is in a consolidation phase. It made a high of 21,169 on the 1st of March. It's pulling back. The key support is at 20,884 to 20,778. Breaks that, and then there'll be a slightly deeper consolidation. Right now, it appears that this is what I would term just a high-level consolidation at this particular time. Slightly higher highs and slightly lower highs and slightly lower lows, as this whole area, this gray area, kind of gets filled in over this week, a choppy week, I'm thinking. But the most important thing for me in my Chapman wave methodology is if 21,169 is taken out on the upside, it extends this leg D, but if it doesn't, it makes a peak D, and that says that the choppiness could last a little while longer. So this is going to be very important. So let's continue with the aspect of looking at the markets, where they are trading and why. Now, the S&P is down 10 at 2372. What's really important about this, it's sitting on the 9-period exponential moving average. The moving average convergence divergence, this chart on the left, the daily chart, is now turning down, and the stochastic has dropped, but it hasn't broken down. It's still above 80%. I like that. So this is, once again, the same sort of thing, slightly lower highs, slightly lower lows. We'll see if this is a consolidation. You have to get bad news and a very high volatility index. At this point, the VIX is at 11.39, up only 43 cents. It needs to get into the 13s and sustain that level of the 13s, and then you will get a more concerted effort. Same thing applies to the weekly chart. In both the Dow and the S&P, the monthly charts are still extremely strong. Let's go on to the QQQ, which is the NASDAQ Index 100. Same thing, sitting on the 9-period moving average support. But the difference is that the MACD has turned down. That's the moving average convergence divergence. And the stochastic is turning down, but it's still at 84%. In other words, there's some internal weakness, but generally the strength is being buoyed by buying pressure. And at this point, it's the same thing in the weekly charts. A lower high this week suggests that it's making a peak D, and we've got to be careful. Let's go straight to gold. Gold is at this particular point up $4, $5 at 1231. It's in a down mode. This is the daily. The weekly says still holding very well, but watch out, because if it takes out 1224 key support, it's going to go quite a bit lower. Let's put that together with the dollar. And most importantly, the dollar is held extremely well. It's having a struggle holding the 9-period moving average, but so far it's been doing that. The moving average in the daily is good. The stochastic is not. And this suggests to me that the dollar is in a choppy sideways move, and that says that the gold doesn't have to break down, but both of them are just going to trade in a sideways range, which takes me to the yields, because the TLT, the T-bond, the 20-year T-bond iShares trading at 118.96, down 39 cents. You can see that it's making this H pattern in the weekly chart. And we've got to watch this really closely, because if the TLT starts to take out 118 key support, yields are going to go quite a bit higher. We need to follow this, and we're going to follow it very closely. So what I need to do right at this particular moment to show you the volatility index, the VIX is starting to make slightly higher lows, but it needs to, at 1141, as I said, needs to get into the 12s within the next day or so, and then you will start to see a more concerted selling pressure. But the 13s is really where the volatility index starts to show selling pressure. So this is the 10 a.m. update brought to you by Everbank. Go to the front page of TFNN or call 855-750-4051 or visit everbank.com, everbank.com, and go to the front page of TFNN. You'll see all the information on Everbank. Thanks for being here. Have a great day.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you could potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.